have already had a 10% correction YTD.
There are a lot of cross currents for sure.
You have two distinct risk drivers.
We've got a geopolitical environment.
Tensions with Russia and the Ukraine.
But also what was going on before that.
The angst around the first Fed rate hike.
Central banks being behind the curve.
And the market has priced them in a very different way.
Well, I'll tell you what, it's going to remain volatile.
Risk assets can definitely grind lower from here.
It's a read and react market.
There's lots of potentially negative news flows.
We're being very, very patient, very, very cautious.
The next couple of weeks are likely to continue to be very volatile.
You're still in a bend, haven't broken mode.
The only thing certain this year was uncertainty.
Our earlier guests on the major concerns for investors. Let's bring in our next guest who says the biggest risk is that Russian aggression will result in elevated inflation for longer than expected. Joining us now, Shana Sissel, founder and president of Banríon Capital Management. Shana, always great having you with us. And this, of course, coming at a time when we have a rally in most commodities, from grains to metals to oil. How much harder does this make the job for central bankers?
It makes it much harder. When inflation is being driven by the supply side, not the demand side, monetary policy just doesn't have the impact that it normally would, because monetary policy really impacts demand more than supply. And what we have with the Russia-Ukraine situation is, while Russia as an economy is not substantial, it is substantial as an exporter of major industrial metals, oil and gas. So these are items that drive inflation. And so this event could very well result in elevated inflation longer than we expected.
So where are we in the economic cycle, and where do you get in terms of portfolio allocation in this environment?
So that's a really hard question to answer, because it's hard for me to kind of think about where we are in the economic cycle. I'd say we were somewhere in like the fifth or sixth inning of the economic cycle. We've had this very long bull market. We've had some sell-offs over 10 plus years, but the economy is still quite strong, even with the headwind that the pandemic presented. So I would say we're in the mid to late innings of this economic cycle, and I think that the Fed has to consider, with inflation as high as it is, has to consider raising rates. And the Russia-Ukraine conflict puts a wrench in that plan. But I don't think it stops them from taking action right here, because at the end of the day, they do have a duty to look at the economic landscape here in the U.S. and decide whether it makes sense to act. And they've been very accommodated for a long time. And it makes sense that they would be considering making some sort of monetary policy move in March.
But does it elevate the risk of a policy mistake? And as an investor, how do you potentially shield against that?
Well, policy mistakes at these points in time are almost guaranteed. They either, global banks in general, not just the Fed, have a history of either overdoing or not doing enough at the precise moment when they need to act. So I think the question isn't, is there going to be a policy mistake, but how bad will it be? Because a policy mistake is virtually guaranteed. There's no such thing as a perfect policy decision when it comes to global monetary banks. So I think here the question is, will the Fed hike too much too fast? Will they front load everything? The other issue is, so maybe they do increase rates, but where does that how does that impact their decision in terms of shrinking the balance sheet? Because those are two separate actions. So I think that there's a pretty good chance that there will be a policy decision. How impactful that will be and how long it will impact the market is a different question, which I definitely don't know the answer to.
Shana, I think a lot of people expected corporate earnings to be more muted than they were, and I think you put yourself in the slightly more dubious camp going into this season. Given that they are pretty positive, is there still a sense that investors are starting to give less reward for positive numbers? And what does that mean for kind of shifting valuation expectations?
Yes, as you pointed out, I did not expect to continue to see such strong earnings. FactSet puts out every Friday an earnings insight piece. And in their most recent piece, they noted that 84% of the S&P 500 companies have reported, 77% have had earnings surprise, so they beat their earnings, and 78% have had revenue surprise. But what they also noted is that historically, the 5-year average is when a company surprises on the upside, they're usually rewarded about 5 basis points on the day of the announcement. But right now, it's only really 2 basis points. And so they're not being as rewarded for performing well as they have been. And I think part of that is just complacency. We've gotten so used to them beating, it doesn't surprise us anymore. In my case, I think that this is a good opportunity as a long-term investor to be able to buy companies that are clearly showing resilience at discounted prices, because we have them not being rewarded as well for strong earnings. But then we have all of the additional volatility that's caused by the headline risk, midterm elections, Russia, Ukraine, inflation, and so on.
How do you play positive commodities exposure?
So I am not somebody who's going to go out and buy futures contracts. I'm going to look at how to get my best exposure through some sort of more traditional, more liquid, easier to trade vehicle. So I really like right here, First Trust has this tactical commodity strategy, which I think is an excellent investment at this point, where commodities really are something that I think the underlying commodities should do well. And that fund is called the First Trust Global Tactical Commodity Strategy. FTGC, I think, is the ticker. So that's my favorite play for commodities right now, because I'm not about to go try to pick which underlying commodity is going to be the best play. I'm going to pay somebody who's much more knowledgeable than me to make those decisions. But I think that that is a particularly good way to play that right now.
Shana Sissel, Banríon Capital Management founder and president, there joining us with her views on the markets. This, of course, as we get the latest on Ukraine. Now the government saying that Russia